Okay, hello and good afternoon to everyone that's currently tuned in with us on another episode of Phillip Trading Podcast. I'm your host for today and my name is Trent. With me here today is my colleague David, a futures and CFD dealer from Phillip Futures. How are you today, David?
I'm doing good. How about you?
Yeah, same. Okay, so in this
Good to hear.
podcast, we will talk about the trading themes for this week and also share how traders can position themselves for the week. So I would like the help of our beloved audience today to share this video to all your friends. The more people that are watching this video, the more we are motivated to deliver greater content to all of you. Okay, so without further ado, let's jump into our topic for today. So we will be discussing on the topic, how to invest in the post-COVID recovery period in 2021. So before I start, I would like to greet everyone, all of our audience here, Happy New Year. So if you have any question, you can message in the comment box below. Okay. As for the world economy continues its recovery from pandemic in 2021, we will be discussing the potential market sectors and companies that investors should include in their 2021 portfolio. Okay, so David, from your point of view,
Yes.
what are the key events and major catalysts in 2021 that would impact the stock market in US and around the world?
Well, actually, there are three major catalysts for 2021. The first one will be the rollout of vaccine, which will lead to the US as well as other countries to open up their borders for major economic activities, and also will also lead to cross-border travel restrictions being lifted. That's the first catalyst. Now, for the second catalyst is the US Federal Reserve, which they are intend to keep the US Fed fund rates, is something like our Bank Negara OPR rates, extremely low. Now, this is to encourage more consumer spending and, unfortunately, discourage savings amongst the consumers, and also to encourage business expansions. Now, because got cheap loans lah. So currently the Fed fund rate is at 0.25%. So interest rate is very, very low. So to the rich US investors and also those normal mother and father, grandfather savers, the deposit rate is so low and it does not create any wealth effect to this group of investors and savers. So what do? So all these investors, they will create demand and buying pressure in the US stock market. Now, for the third catalyst is the announced $2,000 US stimulus check, provided the US lawmaker, they approve this stimulus check lah. So all these three major catalysts lah, they could trigger the next leg higher for the US equity markets. And its rally could even spill over to various markets around the world, like to KLSE also. Now, another small US catalyst is the green energy sector. Now, this is because the incoming Joe Biden administration is very keen to pour money to modernize and also to grow the US green energy infrastructure. So in layman's term, Uncle Joe, as what people like to call him, wants Americans to use more electricity from renewable sources, drive more electric vehicles, and the buildings, new buildings that to be constructed in the US must be eco-friendly. So less fossil fuel, more green energy, and more nuclear power. So there is another catalyst that specifically in the green energy sector, it will have a potential upside.
Okay, yes, I agree with your view. So basically the vaccine, Federal Reserve, and also Biden's policies definitely play a big role in the upcoming market trajectory for this year. Okay, so for our next question, okay, looking at the US economy, which market sector do you think would provide good investment opportunities to investors and why?
Okay. So based on those highlighted catalysts that we discussed just now, there are specific US sectors which could see major upside potential. So the first one will be the airline sector. Now, when the majority of people get vaccinated, then as a result, cross-border travel restrictions will be relaxed by many countries. And the first thing that we humans want to do is to go and see the world. I'm sure everyone, when everyone can go for holiday and also fly, the airplane is how to say is available for travel. I'm sure everyone want to go to take a holiday. Now we want to travel far and wide, so this could spur the U.S. airline sectors and also airline sectors around the world. Now then, as more and more people they are traveling, now this effect will consequently provide much needed boost to the second sector, which is the travel and leisure sector. Now it is no rocket science that people need to stay on hotels or resorts whenever they are on their business or holiday trips. Now furthermore, we also can look at the US cruise line sector, because there are a significant number of people or tourists who prefer to be treated like kings, enjoy all the hotel amenities and facilities, and also go island hopping on a cruise liner, which those traditional airlines or other forms of holiday packages does not cover. So the cruise line sector is another sector that investor can look out for. Now, besides that, the fourth sector is the financial sector, which could see huge upside potential. Now, this is due to the first in, first out nature of this specific sector or economic sector. Now, whenever there is a financial crisis, finance sector is the first one to suffer a plunge or sell-off, because investor will panic sell. And then it will also be the first sector to recover whenever there's an economic recovery. Now, we also can see the green energy sectors, and especially those companies that build parts for the sustainable energy grid infrastructures. And it's also a good potential investment opportunities for investors. Now, whatever happens to the US economy or whoever sits on the White House, there is one specific sectors that everyone can allocate a portion to invest, which is the US tech sector. Now, the reason is because majority of the world's innovation will continue to be incubated and developed from the US. And in my humble opinion, the US tech sector will continue to be a great place for innovation and also investments.
Okay, then we shall see how those sectors will perform in 2021 and keeps our finger crossed. So for the next question, I reckon many of our audience will be interested to know this. Okay, what are some of the potential US companies from the sector that you mentioned earlier, and what are their prospects in 2021?
Okay, so actually that's a very good question, Trent. You actually asked on behalf of every investors. So, okay, for the airline sectors, we can basically look at the major US airline companies like Delta Airlines, Southwest Airlines, and Spirit Airlines. Now, from a fundamental perspective, Delta Airlines is good because it is the second largest US airline company by fleet size, and also the world's second largest in terms of numbers of passengers carried. Now, also that is PE ratio is only 4.9 times per earnings. So it's like relatively undervalued. As a result, its prospects is also very good. Now, secondly, the Southwest Airline is also a good alternative because it is the world's largest low-cost carrier. So it's bigger than our AirAsia, and its passenger volume is not far behind the Delta Airlines. So when the travel restrictions are relaxed, you can be certain that many Americans will choose to fly Southwest Airline because of its competitive pricing. Now, besides airlines, investors can also put on this company into their watch list. Carnival Corp, Norwegian Cruise Line, and Royal Caribbean. Now, whenever there's a widespread vaccination done, people won't tend to think this kind of cruise line stocks like a floating COVID prison anymore. So as a result, many US and also international tourists will start to sign up for these holiday cruise line packages. Now, the next sector is the travel and leisure sector, and investors have a wide selection of stocks to choose or keep in their watch list. First one is Hilton Worldwide, Hyatt Hotel. These two are hotel operators, or can look for casino operators like casino and resort operators to be in fact, like MGM Resorts, Las Vegas Sands, and Wynn Resort. So if luxury hotel or casino resort operators are not an investor's taste, investors can look at their phone and they check that actually there's also another type of travel and leisure companies out there, such as Airbnb, Booking.com, Expedia also. Because to put it simple, when people want to choose for hotel, they also go to these three major apps to find the best hotel deals. And okay, for the next sector is the finance sectors. Now, finance sector is actually quite huge lah. And I believe that investors can actually look for the top 3 US too big to fail banks instead of having a watch list of like 500 US banks and financial companies. That's certainly like too much for the investors to keep an eye on. And my picks are JP Morgan, Bank of America, and also Citigroup, these 3 banks. And if we were to only pick one, or I will only pick one, I will certainly choose JP Morgan. It is simply because it's the largest US bank by assets. Its EPS currently is around $7.67 per share. So its EPS is also quite good among its peers. Besides that, its PE ratio is currently trading at 16 times over earnings with a profit margin of 26%. So based on my humble opinion, it's actually quite good. And when the US economy actually recovers, the financial sector will also be the first to recover too. And this JP Morgan will be a good potential for clients to keep an eye and also to try to earn from any potential upside opportunities. Now, if finance, airlines, travel and leisure is not the investor's cup of tea, and he or she wants to invest in companies that are doing good for the environment, then he or she can actually invest in Tesla. Now, besides being the #1 electric vehicle maker in the world, it's also one of the world's largest battery storage system and a major installer of solar energy system in the US. So actually, it's not more than just a car. You got do cars, you also do batteries, and also install solar panels. So if investors are looking for exposure in these 3 sectors like electric, solar, and also battery storage, but don't want to invest in too many individual companies, then Tesla is a good choice for clients to consider. Now, Tesla will also benefit from the Biden administration push for a green energy infrastructure. Now, however, if clients don't prefer to trade in Tesla, but still want to gain exposure in green energy, maybe the next company can consider is NextEra Energy. Now, despite it being operated in US and Canada only, now it is already the world's largest generator of renewable energy. And they generate this electricity is from the wind and solar. So like Tesla, it will also continue benefit from Biden's administration push to expand America's green energy infrastructure. Now, however, if someone or somehow this company does not excite investors and maybe investors only prefer to trade in US tech stocks, then maybe they can look into Microsoft, Nvidia, AMD, Qualcomm, Palantir, and Square. Now, for Microsoft, it's basically simple. Microsoft is 78% of the world's PC is running on Windows. And beside that, Microsoft has also built an ecosystem where its hardware and software are part of the technology infrastructure that runs our everyday's life. So sounds scary, but it is true. So Microsoft is very well deep entrenched in our daily lives, and it's a good company to invest to. For AMD, NVIDIA, and Qualcomm, and also Palantir. Now, these are some names that which investor can use to consider getting exposure in the AI, 5G, and also big data theme stories.
Okay, yes. So the companies that you mentioned, such as JP Morgan, NextEra, Microsoft, are some of the good companies for our investors to invest, and their prospects are quite bright in 2021. Okay, now a bit of sharing to the investors who are watching this podcast. Okay, from the companies that you mentioned, can investors actually trade them in Phillip Futures CFD platform? And what are the benefits of trading share CFD with Phillip Futures?
Yes. Actually, investors can invest or trade these companies with our NYSE and NASDAQ CFD. Now, investors can invest in an underlying company without actually owning the shares and at a fraction of the capital required as compared to you want to using a large sum of money to invest the stock on an outright basis or cash upfront basis. Now, this is because our Phillip initial margin are as low as 10%. And our minimum quantity to trade US share CFD is just only 1 unit only, not like our Malaysia 100 units. So for US, it's as low as 1 unit. Now, in addition, despite client does not actually own the shares, they can also entitled for dividends and other forms of corporate action that we specifically cater. So that way, our PFSB clients can still enjoy some of the benefits as they would when they're investing in stocks. Now, besides that, we also offer short selling of US share CFD, and it's very easy. It is as easy as just opening an order ticket to short, or as easy as just placing an order. So for clients who think that a certain stock that is will drop, or maybe it's already run up too high already, they can actually open a short sell order and potentially profit if the price drops.
Yes, there are certainly a lot of benefits of trading share CFD with Phillip Futures, right? So to our audience who are actually interested to trade the stocks of US company on NYSE or NASDAQ, you can open a CFD trading account with Phillip Futures, and you can enjoy our current promotion on US share CFD. So from now, 4 January to 31 March, client can enjoy a low rate of only 0.3% commission and stand a chance to win amazing prizes such as iPad, Apple Watch, and AirPods. Okay, so for more details,
iPad, Apple Watch, and AirPods. Okay.
Yeah. Okay, so for more details to our audience out here, you can drop us a message on Facebook, and our representative will get back to you. Okay, so lastly, before we end the podcast for today, one last question for you, David. After discussing the potential opportunities, what could be the key risk event in 2021 that would impact the stock market in US and around the world?
Oh, okay. Actually, that's a very good question, Frank. We also have to consider the market risk when investing, right? Well, there are 2 key event risks which relates to COVID. 2 key event risks. Now, the first one is there is no widespread vaccination being done. Now, maybe due to lack of vaccine supplies, or maybe there's too high demands as more and more people around the world get COVID-19. Now, this is actually an unfortunate scenario from a health perspective and also from a market's perspective, where everyone is getting sick, and this will cause the not only health-wise is very bad, and it will also slow down the economic activity. And as a result, the market may have negatively impacted. Now, the second key event risk is that there could be a new and stronger variant or a mutant COVID-19, which the world is not yet prepared for. There's no vaccine for it yet. So these 2 key events could trigger stronger and sharper crash, unlike we experienced in last year, Q1 and Q2. Now, the crash won't necessarily be long-lasting in terms of duration. but the magnitude could be larger. So investors have to be prepared for this potential possibility as well, no matter how unlikely it will happen. So the best way to manage risk is by placing stops and also not fully utilize your capital at one go. That means don't fully use up all your capital to buy stocks. To buy stock CFDs, just leave some capital as a cushion to sustain any potential market sell-off like this. And also maybe just slowly build up the position over time or go for dollar cost averaging. Now, depending on whichever style that investors are comfortable in. So that way, investors won't get burned on the downside if there's a market crash.
Yes, correct. So the two events that you mentioned earlier might actually place a potential threat to the market. So our investor have to be careful by managing their portfolio wisely, right? So, and now we have come to an end for today's podcast. So to our audience out there, if you have any questions or any topics you want us to discuss next week, you can message in the comment box below. So thank you for listening to our podcast and happy trading for the week. Bye to you too, David.
Okay, thank you, Trent. Thank you, everyone.